What I'm about to show you, crypto kids, is not good for altcoins. You see, everything changed on October the 6th of 2025 when the entire crypto assets industry fell by roughly $1 trillion of value. This was where $50 billion were liquidated. And Raoul Pal gave an interesting prediction, which I want to explore, and it was that exchanges had to step in for market makers, buying up assets that they were supposed to not buy, and now they're slowly unwinding that, causing massive amounts of volatility. Additionally, Benjamin Cowen posted data that I think is relevant for everyone, and it shows that the long-term perspective, at least the yearly perspective for altcoins, is not going to be going in the good direction. And finally, and very unfortunately, we have increasing geopolitical tensions across the world. America wants to step in and help Iran. We're seeing America also being interested to go ahead and take Greenland, and even pressures over in Cuba. This increase in geopolitical tensions are not bullish, and they highlight uncertainty. In times of uncertainty, markets do one of two things. You either consolidate or you go to the downside. So I'm going to try to explore which levels that we should be looking out for when determining where we want to see Bitcoin going to. Guys, before continuing on with the video though, make sure to destroy the like button if you enjoy daily updates, regardless of what's happening in crypto, because, well, when we look at Ben Cowen's data, we can see that the interest in cryptocurrency is at its lowest. Lowest since 2020. We've not seen this low amount of interest in terms of YouTube views, in terms of Twitter engagement, even during the bottom of the bear market. Now, when you zoom in to current data, it is lower interest than where we were at the very lows of 2022 and 2023, which is ridiculous. You know, nothing is happening in the market since basically the final week of November. That's about a month and a half, almost 2 months of consolidation. And people are tired. We're at that point in the 4-year cycles where we transition from bull into bear market. But I don't think we're going to get that huge crash, and we're not going to get it because of Trump QE. We spoke about it on yesterday's video. Trump is trying to artificially create liquidity to not lose the election, the midterm election happening this year. Traditionally, Bitcoin and other risk-on assets, they fall in midterm years, specifically when you're shifting in the 4-year cycle from bull to bear market. But because we're going to see the Trump QE, because we're going to see QE anyways, I think that Bitcoin and cryptos will be in a long consolidation for 2026. And the reality is, consolidation is worse than having big plummets in price action, because at least when prices go down, there is volatility to trade and make money with. So unfortunately, things are not really looking good. And when it comes to altcoins, just jumping back into this charts, you can see that historically, when you do go into a negative inflow of capital, you see consolidation, and it would lie into the expectations of what takes place during midterm years. We need liquidity. We don't have it. We need to see the ISM going into expansionary phase. The ISM is still showing a contraction in the economy. Without an expanding American economy, we can't see an expansion in altcoins. Finally, let's take a look into the rising geopolitical conflict. Well, you guys know the drill. Very sadly, we've seen a lot of increasing geopolitical tensions over the past year or two. And when we go to price action, it suppresses price, right? We're not going to commentate on the politics of it because this is not a politics channel, but it does see a suppression in price when there is times of uncertainty. So when I jump into the technicals to give us some reasoning, we know that we called the 90K CME gap, which got closed. A lot of people doubt CME gaps, but they don't understand that 95% of the time, CME gaps close, and they will continue to do so just because of how market psychology works until the CME switches into 24/7 trading, which they've not done yet. There's another CME gap open at 88.1, which I think we're going to close, and that will paint you a picture of a bearish continuation pattern. You will be in a bear flag, and I think that we will ultimately reach the 200 daily moving average because we do it in every cycle, and so far the business cycles haven't seen the shift. So we're expecting that shift in the business cycle. It's not taken place yet, so we're still following the traditional 4-year cycle prices, and in those 4-year cycles, you always come back to the 200 daily moving average after breaking below it. So I think whether if it's this month and next month or even March, we're going to get a test to the 200 daily, currently at 106. Is it going to happen after a drop into the low 70s, or is it going to happen now? Well, price action will determine that. If we can break above 94.2, then I think a move into 100K will be fast. But if we break below 84.2, then I think we will drop into the low 70s and collect liquidity from April price action. So whether we go up now or see a move into the low 70s and then see price appreciation, are determined by two specific price levels, 94.2 and 84.2. Keep that at the back of your mind for determining which way you may expect potentially the markets to go towards. And with that said, that concludes our update for today. This week, there are a couple of important news events, and that is that we have the market reaction to President Trump changing he wants to change, well, we lost the tweet now, but that's okay. He wants to change the credit card's interest to maximum 10%. So markets will react to that tomorrow. We have the Supreme Court decision coming out later this week as well. They will decide whether if President Trump's tariffs were illegal or not. That will cause markets to be volatile. And over on Tuesday, we have the CPI data, which we will stream over on the Moonshow channel. So guys, thank you so much for watching. Take care, and I'll see you all on the next update video very soon. Bye-bye, guys.